From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 23rd, and you're listening to the Macrocast. Tony Fratto coming to you from New York City. John Fagan and Brendan Walsh in the D.C. area, right? You're back in D.C.?
Yep. Back here.
With our weekly partners on the Macrocast with Markets Policy Partners. And then our great friend, John Dick from CivicScience.com from the greater Pittsburgh area. Are you in the city of Pittsburgh, John? Are you just outside the city?
Just outside the city.
It's all Pittsburgh.
Yep.
Great to have you with us this week, especially as we sit here 11 days or so before the election. You know, we said 11 days before election day is what I should say, but voting has started in so many places, especially this year with mail-in voting and early voting. New York City early voting starts tomorrow. Florida and North Carolina, I think they're already counting votes. So it is it's eternal election day for us now. But one thing that has been constant with us besides COVID has been the stimulus talks in Washington with our daily updates of phone calls between Stephen and Nancy, Stephen Mnuchin, the Treasury Secretary, and the lead negotiator, along with White House Chief of Staff Mark Meadows and Speaker of the House Nancy Pelosi, with occasional cameo appearances of the Senate Majority Leader Mitch McConnell to try to throw cold water on the prospects for any action taking place. But the talks continue. Speaker Pelosi came out again yesterday, and was somewhat echoed by Mark Meadows of continued progress, but still sticking points. The sticking point for the Senate Republican caucus seems to be just the size of the package more than anything else, and state and local funding. That's their biggest complaints with it. Maybe they want some other things included. As each day goes by, it looks less and less likely that it's going to happen, certainly before the election. And, we have to see what happens on election day that changes the dynamics of what eventual stimulus will be. I think, our base case, as we talked about here many times, is that the economy certainly needs support. There are certain acute elements of the economy, whether it's healthcare or education, unemployment benefits running out, PPP loans with all the small businesses that are still hanging out there. Republicans want liability protection for companies that are reopening, and they think that is a damper on economic activity. So there are certainly things out there that both sides want, and then I think that the economy needs. But the magnitude of that support and the timing of that support, I think, is really going to depend on what we see on once we have the election results. John, Brendan, John Dick, what do you guys think?
Yeah, this week has basically been back and forth. We've seen some days of commentary that was a little more negative and then a little more positive. And U.S. equity markets have been kind of chasing these headlines to a moderate degree. We haven't seen huge volatility this week, and so it really has been sort of fluctuations and a little bit of sentiment change. But as the process has gotten this far along, this close to the election, as you say, Tony, 11 days, there's an element of the question about whether we're going to reach a deal before the election or after the election is increasingly academic as the days go by. And what has been clarifying over the last couple of weeks, I think, is the fact that the White House, which didn't really put their stake in the ground very clearly in the early phases of this negotiation, the White House has pretty clearly come out vociferously over the past week plus for a larger bill. And that is encouraging to the market. So the latest offer that we saw yesterday was $1.9 trillion from the White House. That's awfully close to where the Democrats are with their 2.2, and that's incrementally larger and more attractive number when it comes to investor sentiment. There's also a sense that although Mitch McConnell clearly has expressed skepticism, his stonewalling is limits. He's said that he's been more clear about saying that he will bring a vote to the floor, suggesting that if President Trump does prevail in the election, there's going to be a lame duck stimulus that is quite sizable, potentially about 1.9 to 2 trillion, and that's incrementally better from where the markets were just a couple of weeks ago in terms of where this stimulus might be. The big delta, of course, is if Joe Biden prevails and is the victor, then really the Senate's the swing factor. If the Democrats control the Senate in a big blue wave sweep, it's 3.3 trillion, or the sky's the limit in terms of what the Democrats want to achieve with their stimulus plus investment bill post transition. But if the GOP continues to be controlled by if the Senate continues to be controlled by the GOP, then you're looking at the Mitch McConnell ceiling at about 500 billion, which is a very big delta.
It seems to me that this negotiation isn't over money; it's over the liability protection. Nancy won't do it unless if it's in there.
Do you think she will not do it at all, or do you think there's a price? She's just pricing it.
That's a good question. Yeah. Because now she kind of seems to be messing with them a little bit.
Yeah, look, I mean that's the way it feels to me, right?
Yeah.
That you have look, this should have been done again. I hate when I have to keep always saying this. It should have been done 2 months ago. I think it would have been better for Republicans had it been done 2 months ago. I actually think it would have been better for Democrats. It would have been like sort of everyone who's an incumbent would have been in a better position, and but marginally better for Republicans. That said, when you're this close to the election and you know that what the rest of stimulus and what the rest of policy is going to be for the next year to midterm years is going to depend on what happens on election day. It seems like just such a long shot that this is a dance to figure out where they can maybe narrow some differences so that depending on how things go on election day, they may be able to do they get a big package done right after, or do they go with a small package?
Right. That's what slightly worries me in terms of the market's expectation. It's the timing. So if you get a Biden plus a Dem Senate of some majority, I think the relief package is going to be part of a huge bill that they're going to put a lot of things in, and that's going to take a couple months to do. So my worry, not just for the market but for the economy, is they go so big that it takes too long, and it doesn't really help anybody, because by February, March, like, the damage will already been done.
That's certainly possible, but if there is a blue wave, then you could certainly see lame duck, some sort of stopgap lame duck action, and that's whether it's repurposing of the leftover payroll protection plan money, payroll protection money, or some other small ball that doesn't get into the controversial and more difficult parts. I think that's arguable and certainly possible in the case of a Dem sweep.
Yeah, that's my sense. Look, I find it hard to believe, given what we do know about the need out there. Any extended unemployment benefits run out. I guess at the end of the year. There is no new PPP program, so something needs to get done there with all of these businesses that are shut down. Schools are out there doing GoFundMe plans to try to pay for the extra PPP, and the president said last night plexiglass is really expensive, and it is. But so where are the schools going to come up with the money to put the plexiglass and everything else that they need to make schools safe? As we're also, just like, do not forget this dynamic. We haven't talked about COVID today, but we need to, right? Like, cases are surging. there are a lot of states that are reaching new peaks in cases and hospitalizations. The epidemiologists are warning of increases in deaths. We're over 1,000 yesterday, which is
Yeah, that's back to the highs. That's
back to like some of the more recent highs.
yeah. And a lot. It's in rural America now, which
Exactly.
doesn't have the healthcare resources to handle a lot of this stuff.
That's exactly right, Brendan. And I think so. That's why I feel like, look, we're gonna get through these next 10, 11, 12 days, and then very quickly we'll put some Band-Aid on this, and then the next
Yep.
the next tripwire we have is we're operating under a continuing resolution with the budget, right, which comes due in December.
Yeah, I think it's the 21st or maybe the 11th. I think it's December 11th.
11th or 12th, yeah. And so John, that's holiday shopping season, isn't it?
Yeah, we're in. I mean, this is. We know the consumer drives the U.S. economy, but we're in the showtime, right? The next 60 days is when that happens at its sort of peak pitch. And I listen to you guys talking about some of these stimulus dynamics, and I have no idea what the hell you're talking about. So I'm pretty sure the average consumer doesn't either, right? They're
But they're aware that nothing's coming.
Well, right, and that's it. It's for them. It's more of an obtuse: is it coming or isn't it? What we've watched since the beginning of this pandemic is that there's a really tight correlation between concerns over the spread of the virus and consumer confidence, and we know consumer confidence then is a corollary to these other sort of spending behaviors. And we're seeing concern levels about the virus right now that we haven't seen since kind of like late June, which doesn't bode well for the next several weeks. Now, the good news is the consumer is getting a little smarter, right? So their concern about the virus doesn't necessarily cross all spending categories. For example, we tend to be more comfortable today shopping in stores, right? Because I think we've learned that if you're masked properly, you can walk into a store and it's a pretty safe place to be. Restaurants, on the other hand, are seeing the opposite effect, because I think people understand the sort of close proximity indoor restaurant experience isn't as good. But yeah, I think we've
and you can't eat with a mask.
Right, exactly. But Tony, since we started this index, almost a decade ago, which is hard to believe, if I've learned anything from it in that time, it's that consumer confidence is a function more of hope and fear than it is reality. It is a forward-looking, forward-projecting metric, and consumer spending between now and the holidays is going to be more of a function of what they think is going to happen maybe first quarter of next year. And that is going to be dictated a lot by the election outcome next week, right?
Yeah, we've seen some, if you look at some of the indications on spending, like some of the things that, retail's held up pretty well. If you look at like the JP Morgan credit card, reports, the purchases where a credit card was present are up. And not to pre-COVID levels, but they're up pretty high. To me, like what gets missed is the where are those dollars being spent, or like the mix of them and by whom. And we're seeing, I think, as we talk about the K, a K-shaped recovery, is that we're talking about two different kinds of consumers, two different kinds of recipients of consumer dollars too. And I think that gets lost when people just think about where the market is. And it's like we spend a lot of time talking about the market, and it's important. It's important for a lot of different reasons. Certainly important to our listeners. But that's only publicly traded companies that we're talking about, and there are a lot of firms out there that are not publicly traded. That don't show up in the health of businesses that are having a pretty tough time, and those have they have political consequences.
Yeah, and those are the businesses that employ America.
Yeah.
One of the fascinating things that is doing a 180 is the last several years, it was well documented that a lot of consumer spending was getting harder to track because it was shifting to certain categories, particularly experience categories, right? Gifts that the narrative was that millennials wanted experience purchases instead of hard goods or what have you. Well, COVID's put that complete brakes on that trend, right? Those experience expenditures are primarily exactly the ones we can't make right now. We're not going we're not going to concerts and shows, and getting on planes and staying in hotels, right?
Well,
so
just this morning, Mattel had a blowout quarter because people are buying toys.
Yeah, I mean, on paper, I think we're going to see retail numbers look really good in the fourth quarter because people are going to be buying in categories that we're really good at tracking and not buying in the ones we're not as good at tracking, right? I'm not sure that's as real as it is just more semantics, right?
So look, we're going to see. I mean, if if stimulus comes, to me, it doesn't make much of a difference from an electoral standpoint. Not a big difference from an electoral standpoint, whether a deal is announced before the election or not, right? Because I really don't believe that even an announcement will have that big of an impact on where voters are. I mean, voters are pretty complex creatures right now, and they've got like lots of things that are motivating them. An announcement without follow through in a week before election day, I can't imagine it's going to have that that big of an impact with the shrinking share of undecided voters.
And a lot of people have already voted.
Yeah, I guess undecided voters by definition have not, right? Right.
Yeah, one risk factor that sits right on top of the holiday season is that disputed, drawn out, and disorderly post-election scenario where it's recount after recount and it goes to the courts, and we submerge ourselves in questions about how slates of electors are appointed, and these awful questions that none of us hope we have to grapple with after the election, but are certainly possible. That's the big risk factor that far more than which candidate wins. It's really been about the process that investors have been focused on. Election weeks or even months of uncertainty. That's a really inauspicious time for that kind of sentiment crushing atmospherics.
John, has that come down since, if you look at the polls over the last couple of weeks, where there seems to be a greater view that, potentially a blue wave, but if not a blue wave, at least more certainty. Polls are showing a little bit more certainty about a Biden win. Has that shown up in volatility at all?
It has, yeah. So the equity volatility futures have come off of where they were at the beginning of the month. Basically, once President Trump contracted COVID and the polls started to really gap out in favor of Biden, there was a sense that post-election, that drawn-out post-election constitutional crisis scenario, the risk of that had ebbed pretty substantially. So you saw volatility futures around the election date and past it coming down significantly. You saw equities rallying. And you also saw a bump in the Biden stocks, the solar ETF, the alternative energy ETF started to soar alongside his increasing fortunes in the polls. And so that dynamic does probably, it's come off the boil here a little bit. Some of the Biden stocks have gotten hit with some profit taking. Polls tend to narrow into the election. The debate last night was a better performance for President Trump. Hard not to be better performance than his first one. But again, a sense of sort of normalization of the race to some extent. So we'll see how that plays out. We suspect that risk of a very close and disputed election will probably that'll probably be more in focus going into the polling as the race tightens up.
I think it was a better performance by both of them. I thought both Trump and Biden were better, and maybe the ability to prevent the rules and just the threat of the mute button. There was there was a little bit of crosstalk here and there, some asking for more time to talk, but overall it was it was easier to watch than the first one was. That's for sure. And three cheers to Kristen Welker, who I think did a terrific job as the moderator. Hey, so let's take a break now. I'm going to come back and dive in more on where consumers are, holiday shopping season with John Dick, and to see what people are thinking. John said something, said people are thinking about their, driven by their hopes and fears. Let's talk about what some of those hopes and fears are. You're listening to the Macrocast.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The HPS CivicScience Economic Sentiment Index accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through hamiltonplacestrategies.com.
We're back on the Macrocast with John Dick from CivicScience with us, which we're really excited about today because we really want to talk about what's on consumers' minds right now, how that's impacted by the election, how it's feeding into thoughts, and what that's going to look like for how consumers act. John, what's the impact of an election on consumers?
Well, first of all, let's be clear that not all consumers aren't this sort of homogenous blob, right? There's at least two significant tribes we would have to think about today, and so they're going to react almost in inverse relationship to one another depending on who wins. I think a good example or even cautionary tale is what happened in 2016 when Trump won. Hispanic consumer confidence, like the next day, plummeted. We saw it instantly in our ESI. No one really paid a whole lot of attention to that until like in January when NPD was reporting fourth quarter retail sales and saw some softness in Hispanic spending. And then nobody really paid all that much attention to that until like the next quarter when Target reported really soft sales among Hispanic consumers, right? So we think about where we saw it in other categories where we know Hispanic consumers over-index in their spending, like QSR versus fast casual that did better. We saw it the following summer, the summer of 2017, the movie ticket sales were on the floor, and because we know Hispanics significantly over-indexes spending in the theater. So the flip side of that is like even during COVID, we know that consumer confidence generally has been higher among what we'll call political conservatives, rural, what have you. And that I think that explains why we see probably higher than even expected levels of spending in certain outdoor categories, sporting goods, hard goods, kayaking, camping, tents, right? Because people who live in the areas with the ability to do those things tend to be politically right of center, right? So we see the really strong relationship between political orientation and spending in these categories. So project that forward. What happens in 2 weeks? If Biden wins, one group's going to get a lot more confident about their economic outlook, and one's going to get less confident. And map that forward. You can almost even go down to I know the last time I was with you guys, we talked about how Lowe's was outperforming Home Depot in the early days of the pandemic. For a very similar reason, when you kind of think of the archetype of their customer, we could see the flip of that in the fourth quarter of this year, which is really important if you think about holiday.
Yeah. What are the holiday? If we have an expectation that we're going to see a continuation, regardless of what happens in the election, there are two scenarios that have to do with what happens with COVID and what happens with things like work from home and use of technology and sort of the COVID economy and the non-COVID economy. Are there things that you're looking for there that remdesivir was just approved by the FDA yesterday? That seems to have a pretty significant therapeutic benefit for people in hospitals. At some point, we do know, given the multitude of vaccine testing regimes that are going on out there, that one or two are probably going to break through. Will that have an impact on on the way or are people going to look backwards and we're all going to get external cameras for our laptops this Christmas?
That's a good. Well, I think we're going to see. Well, we saw even just on Prime Day 2 weeks ago, people, or whatever that was last week, I guess. People are resigned to at least the next several months of this. We saw it in electronics. We saw it in toys, for example. I mean, parents are home with their kids right now and doing anything they can to keep them distracted, right? So I think at the very least, we're expecting 4 to 6 more months of this. You mentioned vaccines. One of the things we pay really close attention to, confidence and willingness to take a vaccine is going down, not going up, right? The closer we get,
Yeah.
I think there's a lot of people afraid that just because we have a vaccine, I don't want to be the first guinea pig. So it may not be the magic pill we want it to be. But again, back to my point about sort of the consumer economy being more of a function of hope and fear. I think we need to move. We're leapfrogging ahead probably 6 months to think about what a vaccine means, what shifts in COVID mean. I am personally fairly optimistic about the holiday retail season for one big reason, which is that the consumer does still have some pent up spending capacity. We know the consumer spent down a lot of personal debt throughout the pandemic. Credit card debt was spent down, right? So even if our personal financial situations aren't great, we've got that credit card capacity to get us through Christmas and maybe just kick the can down the road to the first quarter, and let this COVID season play out. I mean, we're obviously going to be for a tough stretch as weather gets cold and people have to move back inside, and that's going to kind of probably suppress or depress consumer confidence in the short term. But I think we'll be pretty resilient through Christmas.
Did we see was there, I can't remember the ESI back in March, April, but was there a bump on passage of the CARES Act? Was there anything, and obviously, again, like there are other things going on. You're always like trying to take the noise out of announcements like that. But did you remember seeing any kind of bump at that time?
Absolutely. Yeah. I mean, it wasn't, people weren't getting the bends from reemerging that fast, but it was noticeable. I mean, it was noticeable enough that we could separate it from any other noise that may have kind of caused a bump at that point in time. But no, it was, it made a difference,
Your point on the vaccines, I think, is a good one. And I think we are going to be talking about it, I think, a great deal when we get closer to actual, announcement and distribution of vaccines. I think the dynamics around it, which you noted, are not at all, they're not intuitive. I mean, I feel like I've been saying things like, well, all those people we called, frontline workers and necessary workers, and in essence, we should reward them with getting the vaccine first. They deserve it. They're the ones who risk themselves so that so many services that we rely on can continue. And of course, to your point, like they look at us and say, "No, you first." Right. Like how about some members of Congress take the vaccine first, and then we'll take it. We're not your guinea pigs.
And by the way, even something like that's going to have a lot of political influence surrounding it in terms of the election outcome, right? If Joe Biden says, hey, this vaccine we made is super, super safe, then people who trust Joe Biden are going to have a different view of the vaccine than if Donald Trump is saying, hey, this vaccine we created is super, super safe.
It's really unfortunate. It's one. I think this is one of the most troubling things that's going to create lasting damage for institutions. So many institutions, people have increased their skepticism of, whether it's the courts or the media or Congress or branches of government. But one thing people generally had a high degree of confidence in were things like CDC and FDA, and sort of the consumer safety regulators. That's diminished. I mean, the view that these agencies have been politicized over the past few months, I think, has done damage, and it may be lasting damage. There's no reason why FDA, drug approval should be a tribal, political, partisan thing, right? I mean, we should see them as effective experts, non-political, non-partisan, just doing what's best for the consumer. And so, regardless of who wins this election, I think we're going to be dealing with the that level of damage that's been done in this period that will go far beyond COVID. It's going to extend itself to other kinds of drugs that FDA disapproves.
I know people that are smart, intelligent people that think Dr. Fauci's a jerk.
Yeah.
In terms of between stimulus, obviously, and COVID containment, those are two of the big things that would be swing factors for consumers in the coming months. I guess one of the other the things that market participants are focused on is sort of the changing pattern of consumer behavior as the pandemic extends here. We saw, the early days of the pandemic winners, great strides in Zoom and obviously Netflix. Netflix just came out this week with a pretty disappointing subscriber number, pretty sober guidance for future quarters.
Mm-hmm.
Some of these early pandemic darlings are beginning to kind of play out. John, are you seeing anything in your research that gives you a sense of how people are changing their entertainment patterns?
Because Netflix's guidance was fascinating. We ended up exactly where you would have thought before the pandemic. We just had a huge hump in the first quarter where everyone signed up, but then it went back to the normal pace.
Yeah.
When you look at the last 5 years of subscriptions, it's kind of fascinating.
On deck.
Yeah, I mean, there's probably nothing I'm studying more with greater fascination right now than trends in sort of TV consumption and sports consumption. And I just got a report from our analyst this morning that I haven't fully digested, but what it looks like is what's really happening is just a massive amount of like accelerated fragmentation in media consumption. Overall, sort of like total viewership of content is remarkably flat, right? I mean, well, once we got past the sort of pitch days of quarantine, right?
Yeah.
And then everything else is sort of fallen back in line with the typical seasonality of I watch less TV in the summertime because I'm outside or I'm playing golf or I'm on vacation or whatever else it is, and then we sort of see things start to climb back up in the fall. What's happening? Like the TV networks have been freaking out because they're not seeing the same viewership numbers, and largely that's because there's not a whole lot of new content, right? There aren't big fall premieres because we haven't been producing TV shows. Sports is freaking out because the ratings are way down.
Those numbers are shocking.
What's that?
The sports numbers are shockingly low.
Yeah, I mean, people just aren't as interested in sports. I mean, you can put this cocktail together of, yeah, they don't like the stadiums with no people in them. The sports have been playing on top of each other. So like you have to pick and choose between the NBA and the NFL, which you've never had to do before. You've got, there's definitely a subset, but a smaller than what you'd think group that are kind of protest fatigued and, themselves boycotting on that basis. But really what's happening is just those people are just shifting their attention, their entertainment consumption to another platform. So Netflix is really, in our opinion, kind of what their numbers are more of a function of what we would just call competition, right? In the simplest form, right? HBO Max has had fairly, okay signups. I guess Quibi has not, but most of the other platforms have just sort of glommed onto people.
Yeah, the Disney Plus had huge subscription, right?
Sure. Yeah, I mean, there's just only so many hours in the day for us to stare at a screen. And when you've got a growing number of players fragmenting the landscape more and more and more, it's naturally just going to happen. I wouldn't be terribly alarmed by it as much unless I think if I'm in sports, I worry how much of this is lasting. The cynic in me says that we all got off the sports drug for 6 months and sort of shook the addiction a little bit and realized maybe they weren't as central to a lot of our lives as we allowed them to be, and just we're a little slow to get back on the drug a bit. And there's a lot of other impediments to that, like I said, that maybe are keeping people away from sports, but if that could be a slow burn for a while.
Yeah. And also you have a bunch of TV deals. I know the NBA and especially the NFL have their deals running out. So it'll be fascinating to see if they get the money that they thought they were going to get.
Yeah, you have to imagine that they'll have some kind of they'll have hurdles in there, right? And a lot of contingencies for the future. Certainly if I was negotiating those deals, that's what I would want to see. It is interesting. I mean, look, on the flip side, there's a question of looking at companies and trying to determine who might be the winners. As John mentioned, Quibi was one of the dramatic losers this week. I mean,
I remember their ad campaign was the worst ad campaign I'd ever seen. I had no idea what Quibi was.
I didn't either for the longest time. Had no idea, and then I give them credit for promoting Quibi to me every time I open my Twitter. I would open Twitter and the first thing that was promoted to me was Anna Kendrick's show. So I was like greeted by Anna Kendrick every time I got on Twitter, and so I guess she had some show. And I hate, like, this is like, I don't know, this is like the stupidest thing. This is especially stupid because I'm saying, something that I saw on a platform called Twitter, that the name was just a turnoff for me, right? Like, I don't know why, but like, I didn't want to join something called Quibi.
Yeah, I know.
I
Like
saw you put that
yeah.
on Twitter, Tony, and I got a chuckle out of that. That was funny. You're spot on.
It's like the bank Truist. Someone came up with that idea and got paid a bunch of money to name a bank a dumb name.
None of it's as bad as Trunk, whatever that was.
Yeah, Trump. That was another.
Trunk was terrible.
The Tribune company. Yeah, just really awful. These people, they're trying too hard. But it is, as a consumer of this stuff, and we love it. On the one hand, I love the fierce competition to entertain us, right? It is amazing, like, how much is going on out there to find stuff for us to watch that we will think is interesting. And so there's no shortage of that out there, which is great. The one thing I do miss is that, there used to be, and this is like the old man in me talking, like there used to be a sort of a communal viewing of things. Like there were things that we would watch and talk about together. And even in, I remember, like, one of the things that drew me to Twitter was, like, the first, like, 5-6 years of Twitter, what was great was, like, whatever, things that people say during the day. But in the evening, you could watch Mad Men with other people who were watching Mad Men and comment on it at the same time. And it was like sort of like, communal viewing. Like we were all watching this together and commenting on it together. And, with Game of Thrones or whatever the show was that some significant segment of us were all watching together.
Yep. And even going back farther, like if you didn't watch Seinfeld and you came to work on Friday, you had no one wanted to talk to you.
Exactly. Like you wanted to be part of that conversation and repeat the lines and say the jokes and sort of be part of that. And so, like, the diffusion of entertainment for us now is, like, again, on the one hand, we get to find the stuff that we really enjoy. On the other hand, we don't get to share it with people in quite the same way that we used to. That was a fun and interesting experience that extended our entertainment choices out into real life with each other. But get off.
The thing I'm going to be fascinated to watch is how long it takes until we have sort of a cable redux where people are bundling a lot of these services together, and you have to buy them in packages, and you bitch about the one you ever watch but you pay for, right? Yeah. Because, like, I can't get Apple basically bought up all the Peanuts. Or the Charlie Brown Christmas and so unless you have Apple TV, you can't watch those things. And so, like, all right, when am I willing to sign up for that one thing?
It's going to be so ironic where we unbundled so much that we're going to go back somebody's going to come along.
I have a great idea. Let's put a program together and bring all these things together. And
I wish it existed.
It's inevitable. It's absolutely inevitable.
It has to come because, like, I mean, the number of sort of the number of monthly subscriptions that we all have right now. Like, there is no managing them. They just accumulate, and the numbers are, like, the amounts are just getting way out of hand. And not that, like, any one of them is cheap for the content, right? Just cumulatively, it's insane.
It's also annoying. Like, ESPN Plus puts a lot of the English Premier games on that, but you can't access that through the cable. So then, if I want to watch a game, then I have to go through the Amazon Fire Stick and load it all up and then find it. I wish I could just say, watch the game.
Yeah, I agree. Well, I think we should come back to that. And I would love to have John Dick back for just a specific discussion on this, on sort of those, potential winners and losers, not in entertainment, in meals, in, the sort of lifestyle changes that may or may not persevere in a post-COVID environment. We'd love to do that. Why don't we take a break right now and come back and look ahead to next week. You're listening to the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter @marketspolicy.
And we're back on the Macrocast. Brendan, what do we got next week?
So we have a quite busy data and central bank week. We have a number of U.S. housing data, which continues to shock how strong the U.S. market, housing market is as people move out of cities. But then we also have a bunch of the first prints of third quarter GDP, both here and in Europe. The Bank of Canada, the Bank of Japan, and the ECB are all meeting. And then we also have probably the biggest data point of the week will be the U.S. personal consumption and income. And then within that, we also get the PCE price index. So that's what the Fed uses to target their inflation.
GDP.
And then we also have earnings continuing. So we get the Visa, MasterCard, but the really big one is all the guys that are going to be sued by the DOJ with Amazon, Apple, Facebook, Google, Twitter. So that'll probably be the driving factor of the week.
Sounds like fun. Look, technology is going to be, we're going to be dealing with these questions for a very long time. It's as a business and culture and mixed with politics is a dangerous mix right now, and we're seeing some of that with questions as to whether what Twitter should allow on its platform over the last couple of days. On GDP, which day is GDP, Brendan?
It is Wednesday, I believe.
U.S. GDP is Wednesday.
U.S. GDP, yeah. Thursday. Thursday. Sorry.
Thursday. Okay.
Yeah, so Eurozone is on Friday, and then the U.S. is on Thursday.
Okay, and do we have? Is it too early for early estimates on that? I mean, we know
no, 32%.
32.
Positive. Yeah. So we went down 33%, and it's expected to bounce back 32%.
32% off the bottom, which gets us it doesn't get us back to either.
Right, exactly. That's how percentages work. So it basically gets us about half back.
So we'll be looking back.
Well, that's when the COVID reporting. People are very confused about COVID rates. Like, if it's a 5% infection rate, that doesn't mean in 20 days everybody has it.
Right, exactly.
On the consumer side, to look at in the future, the iPhone 12 came out today. That's going to be a bellwether.
Of good point.
Spending. Yeah. You've got.
Yeah, I've already got it ordered. It should be
the PlayStation 5 and the new Xbox, whatever it's called, coming out in a couple of weeks. Those are also going to be huge bellwethers for spending. I would expect them to be just monsters given stay at home in the fall and so on.
That's a good point. I still have iPhone 10, so or X or whatever it's called, and so I'm looking forward to the new one. To be
I have the 6.
6, nice, man, nice.
Renaissance man.
Yeah, definitely. You could do like sort of vintage pictures with that.
Yeah. How busted up is your screen too? It's like a spider web of cracks.
No. Actually, I got a new one.
Can you even find chargers for that anymore? Is that what's?
Yeah. Well, because I had the insurance, so when I cracked my screen, they gave me a new one, but they give you a 6. So I think they refurbished an old one. But my charger definitely looks weird. So.
Oh man, Brendan, that is awesome. That's awesome.
It was $50 instead of $750. So whatever, it worked.
One thing we are going to be talking about next day, so we will have that GDP number to talk about, both GDP numbers, but especially the U.S. number. We know, the Trump campaign is gearing up for sort of blowout messaging on the strong bounce back in the economy. So it'll be interesting to see if that has any impact in the final days before election day as well. We know the number is going to be very strong. Sort of putting a fine point on what the exact number is going to be is the only question, but we know it'll be strong. So we'll have that to talk about next week, and whatever unexpected things that seem to happen day to day. It may be the final, it will be the final pre-election discussion of stimulus, but I think we'll know whether anything's going to happen now or wait until post next Friday. In the meantime, guys, have a great weekend. If you're able to vote, get out and vote, and we'll see you next week on the Macrocast.
Go Steelers.
Go Steelers.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.